I want you to respond. Okay, we'll divide the items into 4 categories: expenses and incomes, liabilities and assets. So purchases, what is this? Is it an expense or income or liability or asset? Purchase of 10,000. Come on, Rameshwar. What is this? Purchases. Amar, what is purchases? Expense, income, liability, asset. You have to take
Expense.
expense. Expense, very good. Wages,
Expense.
very good. Freight inward.
Expense.
Okay. So these 3 should be taken into trading account debit side. Okay, go ahead. Next, advertising or advertisement. Amount paid for advertisement. Paid means expense.
Expense.
Okay.
P&L account. Indirect.
P&L account. Okay, next. Carriage outward.
Selling expense. Distribution expense. P&L account.
P&L account. Okay. Cash.
Asset.
Machinery.
Asset.
Debtors.
Asset.
Bills receivable.
Asset, sir.
Yes. Stock. Opening stock. Debit item of trading account. Okay, next. Sales.
Income.
Commission received.
Income.
Okay. Where do you take sales?
Sales and
Trading account.
trading account. Credit side.
Received in profit and loss account. Rent received. Income.
Income.
Profit and loss account. Creditors.
Liability.
Yes. Capital.
Liability.
Correct. And what else you had to take on the profit and loss account? Closing stock of, I'm sorry, trading account. Closing stock of 2,100 you had to take in the trading account. Okay, that's it. Now let's look at this adjustment 1. Commission received in advance 400. What do you do with this 400? You take this 400 and deduct from commission received. Out of this 1900, 400 is belonging to the next year. So this is not for this year. Deduct this 400. So that what is for this year you will come to know. 1500 is what for this year. Okay, then what do you do with this 400? Again, 400 is an obligation. Okay, you have to receive next year, you received in advance. It's a liability. It's a liability, right? Others' money is with you for no reason. Liability. Okay, next. Advertisement expenses paid in advance 150. Advertisement. Okay, prepaid expense. Expense is prepaid. Okay, if income is received in advance, it's a liability. If expense is paid in advance, it is an asset. Okay, 350 minus 500 minus 150, 350 is your advertisement. And again, this 150 is asset, prepaid advertisement, 150 assets. Okay, next, wages outstanding, wages outstanding. Okay, 200. What is the wage amount actually? 600. Wages outstanding, add outstanding wages to this 600. So 600 plus 200, it will become 800, right? Again, this outstanding expense of 200 will be liability. Okay, and closing stock anyway is an asset, right? This is the discussion of the trading and profit and loss account and balance sheet. Now please try. I'll give you another 5 minutes. Okay, so then I'll give you the solution to cross check. Yeah. Opening stock 1,000. Okay. Then purchases 10,000. 10,000 purchases. Then wages 600. That is an adjustment for wages 200. Outstanding to be added. That's what we have done. Wages 600. Add outstanding 200. So 800 is the total. Again, this outstanding wage will become liability. Remember that. Then you have sales on the credit by sales. Okay, by closing stock 2100. By closing stock 2100. Okay, then you have freight also. Freight 750. Is there any adjustment for freight? There is no adjustment for freight. So freight 750. Okay, so the total of credit is 17,200. Okay, the debit is 11 plus 11,000, 12,050. Okay, so the difference is 4,650, which is gross profit. It's a balancing figure, gross profit. Okay, so here ends the trading account. Then bring this gross profit to the profit and loss account. From here we start profit and loss account by gross profit. It is to gross profit here, it is by gross profit here, 4,650. Then start taking the remaining items. Advertising 500. Is there any adjustment? Yes, there's an adjustment. Paid in advance, deduct paid in advance, prepaid advertisement. Okay, advertisement 500 less prepaid 150. The difference is, okay, 350. This 150 will become asset. Remember that. Next is carriage outward 400 to carriage outward. Okay, to carriage outward 400. Right. Then what else? The remaining are all assets. Okay, cash asset, machinery asset, debtors asset, bills receivable asset. Opening stock we have already taken, sales we have taken, commission received 1900. Commission received. Okay, by commission received 1900. Less, okay, received in advance. Less, not, it is not prepaid, advance. We are not paying, we are receiving. Received in advance. Okay, 1900 minus 400. So 1500. Okay, so received in advance is liability. Okay, this is liability. Do one thing, you just put like this so that you understand. Okay, prepaid, it is asset. Okay, and this is net profit, it is add to capital. Add to add to capital. Add to capital. Add to capital. Okay, then what else? Wages outstanding, this is liability. Then what else? Closing stock, asset. That's it. Right. First, what we'll do, we'll take assets and liabilities from here. Then whatever we have marked as less assets and liabilities, we will pick up from here. Okay. So we are going with order of permanency. Okay. Yeah. So the difference is net profit of 6,000. Okay. Now this net profit will bring it to the balance sheet. Balance sheet as on 31st December 2016. And there are liabilities amount, assets amount. Okay. Capital 5,000. Where do you get this capital? This capital is this 5,000. Then followed by creditors. So, but to capital, you have to add the net profit and deduct the drawings. What's the net profit? 6,000. Okay, the net profit is 6,000. That 6,000 will add. Okay, there's no drawings in this problem. So therefore, we are not taking. So 5 plus 6, 11,000. Then creditors followed by 2,400. Then we take whatever we have marked as liabilities here. Look at this. Commission received in advance is a liability. Okay. Then just check for L. Yeah. Outstanding wages is a liability. That's it. These two items are liabilities. So commission received in advance 400. Outstanding wages 200. Over. Okay. And next, come to the assets. Assets. What are the assets? First item, machinery, followed by debtors, followed by bills receivable. 8 plus 2250 plus 300. Okay. 8,000, 2250, 300. After that, take the remaining items. Cash. Cash of 1200. You have taken that cash of 1200 also. Okay. Cash of 1200. So you have taken all the assets which are appearing from the trial balance. Now you take what you have treated as assets in the profit and loss account or trading account. Closing stock you have treated as asset. Okay, number one. And prepaid advertising you have treated as asset, number two. So bring those two. Prepaid advertisement 150, closing stock 2,100. Both are assets. So take the total. It is 14,000 and 14,000 on both the sides. Any doubt here? At least you should have some doubts here.
Sir,
Hmm.
can you just go back to trading account, sir?
Hmm. Great.
I just want, this outstanding wages should be added to liabilities, sir.
Yeah, I'll tell you now. It's good that you asked me the doubt. You know, whatever you see here, na, there are 4 points here. Okay, I didn't tell you so for this. I'm not sure whether I told you or not, but I think I didn't tell you this. After some problems, I thought I'll tell you so that once you are used to it. Okay, so there are 4 points. What are they? Commission received in advance 400, advertisement paid in advance 150, wages outstanding 200, closing stock 2,100. These 4 points you have to give dual treatment or treatment twice, or two effects you have to give. Okay, either it should appear in trading and balance sheet or profit and loss account and balance sheet. Look at this closing stock. If you take this closing stock, okay, closing stock 2,100, it is appearing here and it is appearing as well as in balance sheet. Two effects. Number two, let's take one more. Wages outstanding. Where do you take wages outstanding? You have added to the wages. Okay, this is one effect, and you're treating it as liabilities. You're treating it as liabilities. Two effects. Okay, now let's come to the next. Advertisement. What is advertisement? You've deducted from advertisement expenses. Let's say, where is advertisement? Yeah, advertisement. So you have deducted from advertisement, prepaid, right? This is one effect. The other effect is asset. Okay. And similarly, commission received in advance. Okay. What did you do? Pre-advance commission is deducted. This is one effect. Received advance receipt is deducted from commission received. This is one effect. The other effect is liability. Commission received in advance 400 liability. Okay. So that means every adjustment will have two effects. Every adjustment will have two effects. Yes, ma'am.
How it will become a liability, sir? Commission received in advance.
Yeah. For this year, it does not belong to this year, na? It
Yes,
belongs
sir.
to the next year. It belongs to the next year. Till this becomes due, it's a liability.
Okay, sir.
It is not your money,
Okay, sir.
it's others' money, na? Till it becomes due, it becomes
Yeah.
a liability. Once it becomes due, it's your income, it's your own money. Now,
Sir, that means.
as of now, it is
Uh,
not your money. As of now, it
okay.
is not.
Okay, sir.
What is not yours is a liability.
Okay, sir. Got it.
Okay. Yeah. Any doubt, Shabri? Over?
Sir, can you just go to balance sheet, sir, once?
Yeah.
I'm checking that.
Mm-mm.
Okay. Commission received in advance also, you have added it in the liabilities, right? She asked that question.
Yeah, liability.
Okay. So commission, if we are receiving, how it will be liability, sir?
Commission is income, but commission received in advance is liability.
Okay.
1900, in 1900, only 400 is liability. Remaining 1500 is commission is income. Anything else?